What's going on, guys? Gabe here with ReviewDork. Happy Sunday. Mondays can't come soon enough. So I want to cover a couple of things, and then we're going to talk about my trading strategy. A lot of people were curious as to, hey, Gabe, where do you find these stocks, et cetera, et cetera. And so I talked about making returns of even less than 1% on a daily, finding stocks that, over time, whether it be a month or a year, compound it, making a lot of money. I've been made aware that there are a lot of new traders, brand new traders. AMC has sucked you into the world of investing. And there are going to be a lot of people making a lot of money, and they're going to want to know, how do I preserve it? Or, hey, what do I do now? I mean, you just bought yourself a lottery ticket, but does that qualify you as an investor? Maybe not. Now, before we jump into that, I want to talk about the Ortex data. Now, I posted this to the community yesterday. People had a question like, oh, wait, so is the squeeze only going to be 44%? No, it's not. For that particular signal, that signal is going to be a catalyst that will help AMC stock break the $18 barrier. From there, that's when we're going to see a lot of pressure on the hedgies, and they might get margin called. We don't know. We don't know when they will be margin called, but that would put a lot of pressure. And obviously, new investors, FOMO, that kind of thing. Now we got some massive price action. So I'm really excited for Monday and what that would bring. So for you guys who are like, hey, show me how to invest, show me the stocks. For you new guys, this quarter is really going to blow your mind. Why? Because just like the stock price, this quarter can only go one of two ways, heads or tails. Stock price could only go one of two ways, up or down. When you invest in any equity, you have a 50-50 chance of it going up or down. Do not pay the cost of tuition in blowing up your account. We've all done it. Jump into trading, you have all this energy and you're like, I'm gonna be a millionaire, and you blow up an account. We've all done it. Ask any YouTuber that follows the trading niche, and they will all tell you they have blown up an account. And the reason why is, before we even think about making money when we're in the stock market, we have to think about risk management. This is super important. Now remember, I told you, with a quarter in the stock price, there's only one of two ways, up or down. Let's just say you have a 50-50 chance of winning or losing, so over 100 trades, you win half of them. The idea here is that the trades you do win, the earnings need to outweigh your losses. So Gabe, how do I do that? Well, it's with the stop loss. And I'm going to show you guys how to properly size your positions. This is the biggest mistake that newbie traders make. You do not have the proper position size for your portfolio. Your position size is going to be much smaller if you have a $1,000 account compared to a $25,000 account. So I want you guys to take a look here. We have what's called the position size calculator. And so here you would input the total value of your portfolio, which is 10,000, the percentage of your total portfolio you're willing to risk, which is 1%. You only want to risk 1%. Why? Because if you risk only 1% of your portfolio, that gives you 100 chances to make money. Now, if you're risking 25% of your portfolio, you're only getting 4 tries, and trust me guys, this is how you blow up an account. Now, we go back here and we would enter the entry price. So the equity that you're looking to buy, you enter the cost of that entry price. Next up, your protective stop. Stop losses are mandatory in this game. Anybody invest in CTRM? Anybody invest in Zomedica? Remember a few months ago, they were all the rage. Look at how far they've gone down. You need to protect yourself at all times. Now, when we enter this, we click compute, and this lays everything out for us. It tells us the max number of shares we could buy, which is 100 shares. It tells us the position size, which is $1,000. It also tells us the risk amount in the share, which is $1. The risk position is 10%. And your risk position, if things went sideways, would be $100. You just risk $100 or 1% of your total portfolio. Mind blowing, right? But let's say this stock ran to $12. Well, you've made money. At the end of the day, you want to limit your loss and continually put yourself in a position where you could make money. Again, over 100 trades, it's 50-50. Now, there are trading methods using the RSI and MACD with the stochastic, which would up your winning percentage significantly. So maybe you're winning 6 out of 10 trades, 7 out of 10 trades. But all in all, it really wouldn't matter as long as your gains, your risk and reward, right? So your risk is 1, your reward is 1.5, 1.6, right? So you're risking 1%, but you're attempting to gain 1.5 to 1.6%. Obviously, if you jump into play and it shoots up 15%, congratulations. That's a bonus. Move along. It's really that simple. Risk management is the most important aspect to trading. It's more important than finding the right stop. But again, you have to protect yourself. This is just ground zero. Always remember risk management and always remember proper positioning, size positioning. For an example, I'm going to illustrate an account with $25,000. So this is day trading territory, and we hit compute. And as you can see, my position size grew based on the size of my total portfolio. I can buy 250 shares of this stock and set a stop loss at $9, and I'm only risking 1%. Again, if the trade goes bad, I'm okay. Hope you guys learned something. This is Gabe with ReviewDork. I'm signing out. Peace.